Many people are wondering what is going to happen to our home values over the next few years. Some are concerned that the recent run-up in prices is going to lead us back into the same situation that we saw 15 years ago with the crash, which I know for many still feels like it was yesterday, but it really was 15 years ago. The experts say the market is totally different today. The deputy chief economist of First American just tweeted this last week. We do need price appreciation to slow today. It's not sustainable over the long run, but high price growth today is supported by fundamentals: short supply, lower rates, and demographic demand. We are in a much different and safer space. Better credit quality, lower debt to income, and tons of equity. Hence, a crash in prices is very unlikely. Price appreciation will slow from the double digits that we have seen over the last 2 years. However, experts believe that homes will not depreciate. Because I always like to put things into perspective and show you great data, let's look at a few things that show what the difference is between the crash and today. Between 2005 and 2008, buyers were often using 100% financing. They were doing short-term loans, interest-only payments, and adjustable rate mortgages. What's the difference today? They are putting a significant amount of money down on their house, or they're just paying cash. They are also paying principal and interest, and they're locking in a 30-year fixed mortgage. Back then, they were buying homes with no intention of ever living in them. Today, they are using them either as a primary residence or they are turning them into a rental. And here's a big one. We've been talking about this a lot on my channel. Builders were overbuilding for our population growth. They had a high level of vacancy. Today, they can't build homes fast enough. Back then, Wall Street was investing in mortgages. Today, they are investing in flips and rental properties. Because of all these drastic differences between then and now, it shows you our market is really in a strong position. Pulsenomics just released its most recent home price expectation survey. This is a survey of a national panel of over 100 economists, real estate experts, investment, and market strategists. It forecasts that home prices will continue to appreciate over the next 5 years. Here are the expected year-over-year rates of home price appreciation. 2022, 9%, which we have already gone over locally here. 2023, 4.74%. 2024, 3.67%. 2025, 3.41%, and 2026, 3.57%. Those responding to the survey believe we will still see a relatively high price appreciation through the rest of this year, and then we will flatten out and see a more normal appreciation through the continuing 4 years. In one of my more recent videos, I did start talking about some of the small shifts we are seeing in our market and what we are going to continue to watch out for. I believe some of these things are going to be what's leading to us getting back to a more normal appreciation. So what does this mean for the buyers? Well, with limited supply still out there and home prices as well as mortgage rates continuing to rise, it's still going to make it challenging for you to find a home. However, buying a home sooner rather than later still does have its advantages. Now, I know you're thinking, you're a real estate agent, that's how you get paid. I promise you, if it is not right for you, I don't advise you to buy. But for most people out there, it is still a great time to buy because as our home prices continue to rise, as well as our interest rates continue to rise, some people are going to get priced out of the market. So it's better for you to get in now and then ride that appreciation up. Lock in your mortgage rate now before it starts to increase even more. Then you will see all of that equity that we've just talked about over the next 5 years. You will be able to experience that gain and grow your wealth. Let's just look at a quick example. Let's say you bought a home at $360,000, which the National Association of Realtors says is the median price in the nation. If you factor in the forecast from the price appreciation survey, over the next 5 years, you will accumulate $96,000 in equity. That's a lot of money. Now, I know that there are still buyers out there that are saying, I want to wait until it's a buyer's market. Well, I just want to bring this to your attention. Think about this. When you're buying in a buyer's market, which direction are the home prices going? They're going down, right? When you buy a home in a buyer's market, you are always overpaying because if you buy one now, this month, right? The next month, it's going to be worth less money. Now, I do not advocate for anybody to buy their primary residence as a short-term investment. So if you buy in any market and hold it, I do believe that it's a great investment. However, buying now and riding the appreciation up is always better than buying and riding the depreciation down. So whether you're trying to decide whether to buy now or wait, the biggest thing is understanding what the experts are saying is the appreciation expectation. Experts say that prices will continue to climb over the next few years, just at a slower pace. So if you're ready to buy now, it might be the best thing for you so that you can continue to ride without appreciation. And if now is not the right time to buy, then that's okay. It's just good information for you to know so that you can watch the market and get in when it's the right time for you. I hope this video was helpful. If I can answer any questions, please feel free. Reach out, call me, email me, text me, post a comment down below. Don't forget to hit that like button and make sure you pass this along to anybody that you think that it could be helpful for. As always, I thank you for watching and I'll see you next time.